Good morning, Paul Georgi from Allendale, April 18th, 2011. Some of the news here affecting outside markets, which I think will carry over into the grain market, is we got the dollar up sharply here this morning. Crude's down $1.60, and some of this is off of news out of the Eurozone. We got Moody's downgraded the Irish banks' long-term deposits as junk, and that provides some weakness to the euro, in turn support to the dollar. And also UK plans that they are not going to be participating in the Eurozone rescue fund, which will help bail out Portugal. So that news is concerning to the euro and giving some support to the dollar here this morning. We also had China raise their bank reserve requirements again by 0.5%, up to 20.5% here over the weekend. And that's caused pressure in the corn market. Traders have backed away from the corn and pretty much all commodities early when that news came out, and then since that time the markets like the soybeans and the wheat have firmed up. Wheat especially because of the weather conditions. The southern plains didn't get any as much rain as anticipated, some light scattered amounts, and the forecast is for relatively dry here for the next week. So hopefully that area can get some rain after that, as there is a little more rain in the forecast after the 10-day on out to the 16-day period. We did have Putin announce over the weekend that Russia will not be exporting any wheat at least until July, until the new harvest comes in. So that is a bit supportive for the wheat market. Old crop corn under pressure on profit taking, but new crop corn stronger on weather. Waking up here in McHenry, Illinois this morning, we had over 2 inches of snow on the ground, which certainly was a surprise to us. As one of the guys came in the office here this morning and says, took pictures here this morning because normally we'd be starting to plant corn. Well, there's no planters going to be running in our area here probably for several days. And that's given us support in the December corn contract, up about 4 cents here overnight, and more liquidation of that old crop, new crop spread as we see nearby corn down, deferred contracts higher. The Commitment of Traders report came out Friday afternoon, showed that the funds increased long positions in corn by over 34,000 contracts. However, in the soybeans, it showed that they've reduced their long position by over 22,000 contracts. The other news in the soybeans is South American harvest continues to move along. Weather reports down there are for some showers, normal type of fall or harvest showers that we would normally see, as they're in the fall time down there. So it's looks like harvest is going to progress well, and the more beans in this bumper crop that they've got harvesting in the southern hemisphere will certainly weigh on export demand here out of the U.S., and we would expect to see China and other countries move to the southern hemisphere to be buying their needs here in the near term. And that's something we're going to need to watch very closely the next several weeks as we look at exports, and are they going to be a plus or a minus, because it certainly could be some shifting of demand from the U.S. down to Brazil and Argentina. The livestock trade, cattle cutout values were down on Friday, down $1.53 in choice, down 36 in the select. We do have a bright spot here for the next week or so as the Easter holiday gets out of the way. We've got first of the month coming up, and we should see some featuring of beef at the retail counter here in the next couple weeks. However, we're going to be moving into a time period where supplies of fed cattle will increase based on the placement numbers that we've seen here several months ago. Numbers will increase as we go into May and into June, which should weigh on this cash market, and we think that we could see several more dollars to the downside here in the fed cattle over the next several weeks. In the pork trade, cutout values there were up 57 cents. Competition for pork continues to be chicken, with the large supplies of poultry and poultry meat that we've got available. We'll continue to keep a lid on this pork price, but we are going into some tighter numbers there, and we're just coming out of a season here where demand has been excellent for ham. So for the Easter ham time frame, we're also seeing excellent demand in pork for pork bellies or bacon, and that has been a supportive factor for the cash trade there. Markets this morning expect to be steady, firmer there as we close week on Friday with a little bounce late. Would expect that we could see a little higher price early, but and then the market's going to have to figure out if there's what this money flow is going to do, based on the Chinese influence and overall attitude of investors here this morning. So a lot of things going on this week. We do have a shortened week because Friday we're closed for Good Friday, and we'll have a volatility packed into 4 days. So stay tuned to Allendale. We'll keep you informed. You can reach us at 800-262-7538. Be happy to answer any questions you might have. We wish you a very successful trading day. We'll talk to you tomorrow morning. Thank you.